Good morning, everyone. Welcome to the week 8. Today we're going to talk about most probably the goods and services tax and GST and business registration and etc. So we will start with the business registration. You may that the first registration we're talking about the tax file number. We call TFN number. Individuals and businesses they should have a number to communicate with ATO in regards to that their income tax related matter. If a client to communicate with the ATO income related matter or income tax related matter, they must have a tax file number. Without tax file number, you cannot communicate with the ATO in your income tax related matter. You are an individual or sole trader or individual or non-individual, foreign resident or non Australian resident, you must have a tax file number to communicate with the ATO your income tax related matters. So individual like you and me, we should have a tax file number. We all knows that. Now we will come back businesses. I'm going to talk about the 4 different type of business structures. Sole trader. If you're running your business as a sole trader, you no need to have a separate tax file number for sole trader business because sole trader business income reported with the individual tax returns. So we can go and see how that happened. I will share the screen now with that in our Zero Practice Manager. We'll go to that in our Steve Smith tax return. Uh, Steve Smith. Oh, where's that? Oh, I put that Steve. All right, Steve Smith tax return. If you go to here, right? So that's sorry, that's good. That's the activity statement. So I will open a tax return for Steve Smith. So when we open the tax return, you can see we are reporting in our sole trader's income in his individual tax return. So the income here in his employment income and other all the income, if you click in the business here in the down, here you are going to report his sole trader income. So sole trader business not required to have a separate tax file number because you are in reporting through your so a client normal tax return, individual tax return. Therefore, sole trader business not required to have a tax file number. So, however, the partnership required to have separate tax file number. Partnership not going to pay the tax. Partnership tax will be not assessed. It means partnership not going to pay the tax. However, the tax office for the compliance purpose, you must report to the ATO about your partnership tax return. The reason you are one of the reason you are reporting that tax return to partnership because the ATO can match that how much the income you got it from your partnership. So when you lodge the partnership tax return in your distribution between the partners will be reported to ATO through the partnership tax return. So even though partnership not paying to the tax, partnership should have a tax file number to communicate with the ATO. Right? Second business structure, trust. Sorry, that who is going to pay the tax for the partnership tax income? That partners going to pay through their income tax return. However, partnership required to report to ATO their total income and how much they are distributed between partners. The trust, the next one is the trust. Most of the time trust not going to pay the income tax. All the income will be distributed between beneficiaries. However, if you not distribute the income to the beneficiaries, you required to pay trust required to pay the tax. So in both case you are paying to the tax or not paying to the tax, you're going to report to ATO the trust income and expenses through a separate tax return. Therefore, trust should have a separate tax file number. Company is a separate legal entity, so therefore that should have a separate tax file number to report their income tax to ATO. So sole trade only, not going to have a separate TFN because owner's TFN going to be a same TFN for sole trader business as well. Excellent. So now we will move into the tax file number. So how we can, so as a registered tax agents, we can apply for the TFN for the partnership, trust or company. However, we cannot apply the TFN for normal, so that individuals. They should go through that normal process, go to the post office or go to the in their school or wherever. They want to apply directly from ATO and get it at their tax file number. But the partnership, trust and company, we can create a TFN number using in our tax agent license. Now we will come back to the ABN. So as we all know that TFN, if it is not quoted, 47% we won't withhold, and if it's a non-resident, that's a 45%. But the reason for these two difference, 2% of Medicare levy, because non-residents are not, foreign residents are not paying the Medicare levy. Now next one is Australian business number. We call ABN number. ABN number, if you want to communicate your business tax related matter with ATO, you require to have a Australian business number. So Australian business number is 11-digit number, right? So however, all the businesses have 11-digit number. However, if you are a company, company may have a separate number called ACN, Australian company number. If you know that those ABN number, you no need to ask from them what is the ACN number. Why? The last 9 digits of ABN going to be in your company ACN number. So if you are a company, your ACN number will be last 9 digits of your ABN, right? And you will not need to ABN to operate GST system. If you want to communicate any business tax related matters with ATO, you require to have ABN. So any income tax related matters, TFN. So we can create that ABN for businesses, any kind of businesses, sole trader or partnership or trust or company. We can create the ABN through our tax agent license. As we discussed previously, residential property owners not entitled to ABN. If you not quoted the ABN, there will be a 47% of that payment will be withheld, but I will cover that one under the PAYG section. Now we'll come to the other business registration. They call ATO registrations. So TFN, ABN registration, we talk about that one. Now we will talk about the ATO registration. So whatever new business taxes you require to report to ATO, you must register with ATO separately. Goods and services tax, PAYG withholding, PAYG installment, French benefit tax, fuel tax credit, luxury car tax, wine equalization tax. Each taxes, if you want to pay, you require to register for GST. For example, your turnover goes above GST turnover above 75,000, you require to register GST. If you employ the people to work for your business, you require to register PAYG withholding. If you require to pay that your business income tax in advance, you must register for PAYG withholding installment, pay as you go installment. If you want to pay some additional benefit to your employee as a French benefit, you require to register for French benefit. If you want to claim any fuel tax credit from ATO, you must have a fuel tax credit registration. If you are selling some luxury cars, you're required to register for luxury car tax. If you are selling some wine product, you may require to wine equalization tax. This all the registration you can do when you do that through the in our ATO portal. So if when you work under the tax agent, this registration you may able to do, right? You no need to go to separate registration process. So now other two business registration information we want to talk. The business name. By default, the sole trader business name, owner's business name. By default, partnership business name, partners business name going to be partners business name by default. Trust, whatever name they started, that's the name. Company, company name. So these all are by default business name. You no need to pay anything. However, if you would like to have some fancy names to make it more appeal to your business, you require to get that names. For an example, a sole trader business, they like to have excellent bookkeeping service. In that case, they should go and register and get that business name. How many business name you can have for one ABN? Multiple business name you can have, but every business name you should pay at least $38 per year for the fees. If you're not paid, that name will be going out from you. So one business name, unique. So you, if somebody have a name, same name, you cannot take it. For example, you cannot get the premier tax and bookkeeping name because already that name registered with the PTP. So therefore, you cannot get that name. Textbook, you cannot get it. Textbook, part of the business business name for PTP. So the business name you can have multiple, but you are required to pay every year. At this stage, $38. If it may be different later. Now we will come back to the business activity statement. As I said, income tax return we are doing through the income tax assessment form. All of your business taxes, which is goods and services tax, friendship benefit tax, PAY withholding, and luxury car tax, fuel tax, credit and wine equalization tax, all these taxes are you are reporting through the business activity statement. So now we will see one of the business activity statement how look like that, right? Then we can work it out how we going to work that business activity statement. So what you are going to learn today, so you're going to understand how you going to work with the business activity statement. So you can see business activity statement. So that's a business activity made, and you should have your document ID, an ABN number, and GST, accounting method, and payment due date, and etc. This information will be maybe you can access from ATO portal. So when you have that your contract with the PTP, they will give you the access to that your PTP portal. So I will go and see what is in the PTP portal in a minute, right? Right, so where we are, I think this one. So everybody can see that my screen with the PTP portal. Yes, excellent. So I will put it that some prestige logout login. Give me a 2 second, guys, and I will just log into that about ATO portal. Then we can look into that, see that how we are going to understand that logo document ID. So each business activity statement required they have a document ID. Document ID can be take it from our that particular portal, which is in our ATO portal. So you can see now I am going here, Prestige maybe, yeah, Prestige. I will put it something comparison sales. Yeah, that's good. So if we go to that this business, we will click that in our lodgement activity statements. All right. I'll go to history and see because I lodged that already January to March for this business yesterday or the day. So if you click here, you can see document ID. Each batch statement have a separate document ID. You must be very careful and correctly enter the document ID. Otherwise, it will be not go through the ATO, right? Otherwise, it's not go through the ATO. Second one, accounting system. Which accounting system you are going to use to calculate the GST, accrual basis or cash basis. I will cover in a minute what is the difference between accrual basis and cash basis. You all knows that. So now we will come back to that our form, which is called in our best form. You can see the different version of the form. I am using the version V, which is going to give us all sort of different calculation. That number of around 15 different best forms are available. But if you understand this form, and you can understand all of the form, because there's a combination, right? You can see, start with the goods and services tax. There are three different type of reporting for the goods and services tax. Then you are going to move to PAYG withholding, is the employee's tax you are taking out and paying to ATO. PAYG installment, you are paying your income tax, business income tax in advance. Then you can see wine equalization tax, car luxury, car tax, FB, that Frenchy benefit tax, and fuel tax credits. So everything will be in this form. So what we are going to talk today, we're going to more focus on goods and services tax and PAYG withholding. Then we will come back to other taxes most probably next week. So I'm going back to that in our original activity statement. So as I said, this all the taxes should be reported. The goods and services mean 10% of tax. So that goods and services and other items sold and consumed in Australia. How is the GST works? Generally, business and other organization register for GST include 10% of on their sales. $100 their sales, they are adding the 10% of that, which is $110. Right? The claim that whatever GST you paid for your purchase or your business purchase, you can claim from ATO. That's the way it's work, and you're required to register a tax invoice. You can see total sales including GST $165,000. Total purchase including GST $110,000. So calculate the GST. So this 165,000 including GST. In that case, you should divide by 11 to get the GST collected. GST collected mean this much of amount that you collected on behalf of ATO. So that amount you want to pay back to ATO. That's called GST collected. Purchases $110,000. So that purchase, you how much the GST you paid? 110 divided by 11, which is $10,000 negative liability. Why we are saying if you collected, you want to pay to ATO, that's a liability. If you paid, ATO should pay you, so it's mean negative liability. So difference between two, you're going to settle to ATO. In this case, 15,000 you should give to ATO. 10,000 ATO should give you. Difference between two, $5,000 you required to pay to ATO. That's called goods and services system. How is that GST system work in Australia? So you should register for the GST if you are exceeding your GST turnover $75,000 for the normal businesses. For non-profit organization, GST turnover limit $150,000. However, if you providing the passenger transport like a taxi or Uber or limousine travel passengers, you require to have GST registration regardless of your GST turnover. For an example, if you have $60,000 your Uber business, you must register because that's mandatory. Regardless of your turnover, you must register for GST, right? And if you don't register for GST or required to, you may have to pay the GST when that they understand. So now we will come back. GST turnover. We did not use the terminology sales amount or GST amount for 75,000. We use a new terminology, GST turnover $75,000. So we should understand what is this GST turnover. GST turnover mean your total sales minus GST, right? Excluding following item. GST, you want to take it out from your total sales. Anything sales not subject to GST, you want to take it out. Now, for example, in your normal sales, $77,000. So how much that GST turnover? So take it out the GST component 77, take it out $7,000. So 70,000 US GST turnover. Therefore, you no need to register for GST. 88,000 total sales including GST. How much that GST turnover? 88 minus GST component, $8,000. So 80,000. Now you are above $75,000. Therefore, you required to pay the GST, right? Required to register for the GST, right? Then we will come back in your GST turnover from your sales. Any sales not subject to GST should be excluded. You see, excluding, right? Okay. Now we will say your business is a farmer, your client. He is selling that his total sales for the vegetables $100,000. So how much is GST turnover? Total cross sales $100,000. How much is GST? There's no GST for the vegetables. So no GST means sales not subject to GST. Therefore, all 100,000 minus 100,000, their GST turnover will be zero, right? Even though sales 100,000, their GST not applicable for that sale should be taken out, excluding sales that are not taxable. So how much is the sales not taxable? All 100,000 are not taxable for vegetables and fresh fruit and vegetables. Therefore, 100,000 minus 100,000, zero. Your GST turnover is zero. Therefore, farmers not going to register for GST because their GST turnover always zero, because they are not selling anything GST applicable product. If they're selling applicable product, we can calculate. So that's the way GST turnover work, right? So there's a sales not connected to Australia. For example, if you're exporting outside of Australia, that should not be included in the GST turnover. For example, in your business, total sales 3.3 million. So all of them are the exporting. So how much is GST turnover? Cross sales 3.3 million. Exclude export is not GST applicable. Therefore, 3.3 million minus 3.3 million, export GST turnover is zero. They no need to register for GST. However, farmer or export business, if they would like to register for GST, they can register voluntary registration. That's called voluntary registration. So when they register, for an example, when the farmer register for GST, when they are selling vegetables, no GST, they no need to charge, they no need to collect, they no need to pay to ATO. Whatever the product they are buying for the business, like a little tractor and machines and materials, what they purchase for the business, they can claim the GST. That's called GST-free rules. You cannot charge a GST, but you can claim the GST, whatever you paid for your business purchases. Input tax sales, I will explain a little bit later. Now, as I said, you saw that previously, there are two accounting methods to calculate the GST. One called cash basis, other one called accrual basis. Cash basis mean all of your business transactions are GST calculated based on the payment made or payment you received based on the cash sales and cash purchases. So if your business is less than $10 million, you can choose to do the cash basis method. Your turnover less than 10 million, you can choose to do the cash basis. However, if your turnover exceed 10 million, you have no choice. You must use the accrual basis system. So if you're less than 10 million, you can use cash basis or accrual basis. That's your choice. But if your turnover go to more than 10 million, you have no choice. Only you are going to do the accrual basis. What does the accrual basis mean? So when you are doing the accrual basis system, what you are going to do, you're going to calculate based on that amount invoice generated or based on that bills received. No matter your amount is paid or not, it is not in a question. So accrual basis method you are going to calculate based on the actual invoice generated or based on the actual bill received. So no matter that accrual basis or cash basis, you want to work it out your GST and report through the BAS. Can we change it? For example, less than 10 million, can I change from cash basis to accrual or accrual to cash basis? Yes, less than 10 million businesses can interchange. However, they can change only start of the financial year. They cannot change every best period, right? They can change only start of the financial year. Right, so that's called accounting methods, right? So now I will move into this section I will cover later. Now I move into that goods and services tax. Right. All right, we're going to move into goods and services tax. So as I said, millions of product, we don't know which one is a goods and services applicable, which was not. So I am going to group as a three group of GST rule. One, GST taxable sales. It means when you are selling, you are going to charge 10% of GST and you can claim the GST, whatever they are, you are paying for that business. That's called taxable sales. The taxable sales, you should have a consideration. It means you should have a price times 10% only, number, right? 0 times 10%, 0. So you should have some price on that product. And second one, it should be connected with Australia, right? It should be connected with your business you run. If your personal product, you are not going to charge the GST. But if you're doing some business only, we can charge the taxable sales and should be connected with Australia. If it's not connected with Australia, GST free. The business is registered, you should register for the GST and you should be a not GST free or neither input tax supplier. Now, if you want to work it out all the product which is the taxable sales, very hard. So we will see how we going to work it out. First we will understand what are the product are GST no need to charge. Very few, around 17 group of people or group of product. If you understand that 17 of them, that's GST free. Then we are having other two group that's called input tax sales. So in total around 19 different group. If you understand all of them, rest of them are taxable. Very simple, right? So what we are going to learn in this today, we're going to understand what is the GST free sales, what is the input tax sales. If you understand two, rest of the stuff going to be 10% of GST. Right, so I'm not going to talk all the product you want to tax it 10%, 10%. I am only going to talk what is the GST free item, what is the items are GST not charged under the input tax sales, rest of them are GST applicable. Now we will come back. What is that GST free item? Anything you export to abroad, that's GST free. So whenever you export to other country that's consumed outside of Australia, therefore you no need to charge a GST. So GST free. Most of the basic food coming from natural environment like vegetables and fruit and seafood and livestock like a beef and lamb and pork, most basic foods are GST free. However, if you do some modification on the basic food for customers preference, you required to pay the GST of 10%. For example, chocolate milk, you're paying 10% of GST. But the normal milk, we have not paying the GST. Right? Council rates GST free. Water and storage and drainage GST free. International mail GST free. Local mail GST applicable. International transport, anything going to your flight from here to Bali or here to Sydney, here to US, GST free. But if you travel between here to Melbourne or Melbourne to Sydney, it's GST applicable. Duty free shop, GST free, because that's called duty free. We are not going to pay the tax. Some educational courses are GST free. The preschool and primary and secondary courses are GST free. In the type level courses, whenever nationally recognized qualifications or nationally recognized unit delivered by registered training organization, GST free. However, the short courses like a MIOP course or a tax course, that will be GST applicable. Sales of business going concern. If your business is going to run next 12 months without without disruption, that's called going concern. There are expectation business is going to run other 12 months. In that case, that's called going concern. So when you are selling the whole business, you no need to charge the GST, and buyer also cannot claim the GST because there's no GST on sales. Some medical and health products are GST free, right? For example, GP, your general practitioners, there's no GST on that, just a GST free. And some medicines, GST free. Whenever if you're buying through your Medicare card, that particular benefits going to be GST free. But if you are not come under the Medicare card, most of the time that's GST applicable. Children services, normal child care, GST applicable. However, family daycare or child care, within the suburb that 2 or 3 kids they are managing with their home, that's called family daycare or child care. That one going to be GST free, but normal child care, GST applicable. Religious services, no GST. Supplies for accommodation and meals for the residents in a retirement village, GST free. And cars for the disabled people, GST free. And precious metals, your diamond and gold and silver, when you are taking out from the natural environment, going to be GST free. So when you are getting from natural environment, GST free. Grants of the land by government, GST free. Farmland, GST free. Some telecommunication supplies. Whenever you are using your telephone outside of Australia, using the roaming, that particular mobile call and internet roaming you are making from other countries to Australia, that's GST free because you are consumed outside of Australia. If you consume inside Australia, GST will be applicable. Input tax sales. So what does the GST free sale mean? You are not going to charge the GST, but you can claim the GST. They call GST free suppliers. Then we will go to the input tax suppliers. What do the input tax supplies mean? You cannot charge a GST and you cannot claim the GST. Very unfortunate, right? For an example, financial suppliers, Commonwealth Bank, when they are giving you a loan mortgage, interest, bank fees, no GST, and they cannot claim the GST as well. There are this type of suppliers. One, financial suppliers, so who are borrowing and lending, or who is giving the credit card or grant the credit to the customers, or buying and selling the shares, or transfer or assign the super fund. This type of the transactions are, or this type of businesses are in their product GST free. They cannot charge the GST. Your bank fees, no GST because input tax apply. Your bank interest for the business, GST free because that's the input tax applies. Right? However, the banks, when they're providing some others other than lending and borrowing services, they will charge the GST. For an example, your FTOS machine, when you're using FTOS machine, bank will charge a merchant fees. That's 10% GST applicable. When you may be getting the insurance from the Commonwealth Bank, even though bank is a input tax supplier, but insurance product not come under any of this financial supply category. Therefore, GST applicable for the insurance because that's not involved with the lending or borrowing or credit or shares. Therefore, that's GST applicable. Second one, residential rental premises. When you have the rental for the residential, there's no GST. However, Commercial rent like a motel, hotel, right, and caravan park, and all the places, normally 10% GST for the rent. However, for residential premises, they call input tax supplies, no GST on that. When you are selling your existing house, you cannot charge a GST. But when the builder selling a new house, he will charge the GST. Right. Now we will come back to GST credit. When we can claim the GST, you can claim only the business portion of your purchase. The GST credit mean what happened when you are spending some money, or if you are purchased some item for your business, if you registered with the GST, you are able to claim that money what you paid as a GST. So how much you can claim? Again, 10% of your total sales. So how much amount you paid as a GST. Sometimes we are purchasing the item for business and private. In that case, your private, the proportion cannot be claimed. For example, you purchase a laptop for $1,100 and 50% you are using private, other 50% for your business. So how much we can claim? $1,100 divided by 11. So $100 total GST. You are using only 50% for the business. So you can only claim $50 from the GST. That's called proportionate or apportionment of your GST claim. Purchases does not related to the input tax supply. So if you are anything input tax supply, you cannot claim the GST. So therefore that purchases should not connected with the input tax supplies. The purchase price should be included GST. If you're buying anything, no GST on that price, you cannot claim. So what are the two circumstances? One, if your product is GST-free sales, like a fresh vegetables, you purchase, there's no GST, you cannot claim, right? So you must provide the payment. If you not provide if you are required to pay or liable to pay the payment, that's fine. If you're getting free from that somebody, you cannot claim the GST. For example, you are running a little bookkeeping business. Your parents give you a $22,000 worth of car fully used for the business. How much you paid? Zero. Therefore, there's no GST involved with that one. You cannot claim the GST for the gift item what they provided, because there's no payment involved with that one. You should have a tax invoice. If you want to claim the GST, so you should have at least anything above $82.50. You must have a tax invoice. Right? Without tax invoice, you cannot claim unless the amount is less than $82.50. How long we can get the claim? For example, if you forget to claim a receipt, if you forget to claim an invoice, how long you can keep it? You can claim within 4 years anytime. That's mean if you not claim before 4 years, or just after 4 years a tax invoice, today you can claim. That's called the GST claim limit up to 4 years. Purchases, private and business use, and explain. You should have a tax invoice. I said that to claim the GST, the tax invoice should be consist of 7 mandatory item for less than $1,000 tax invoice. You can see the name in the tax invoice and your business name, your ABN number, and date of that sales transaction, and quantity and description of that your product, and your GST component separately so, and should be word saying that total price include GST. If that all the 7 item must be so to claim the GST in invoice. If any one of the item missing, you cannot claim the GST. If your transaction is over $1,000, you must have your customer detail. Can you see number 8? That's called over $1,000. You must have a customer's name and ABN or address. In that case, that's a one fully a tax invoice. So tax invoice mean all these features must have. Otherwise, you cannot claim the GST. Second-hand goods. When you purchase second-hand goods from that from a public, you may be not claim the GST because you may say there's no tax invoice. For example, you went and bought a car from your business from a normal public. He cannot give that tax invoice because he may be not registered for the GST. So in that case, how we going to treat? That's called second-hand purchases from public. If the amount is less than $300, you can immediately claim. Amount is less than $300, you can claim immediately. If the amount is more than $300, you must wait until you sell it that particular item. For example, if you purchase a car $5,500, you cannot claim because that's more than $300. You must wait. When you are going to claim, how much you going to claim? GST credit lesser of 1/11th of amount you paid or liable to pay for the purchase of goods, or the amount of GST price in the item when you sold. Which one is the lowest one? That's the amount you can claim from ATO, right? So that's called more than $300. You should wait until sell it that product. However, the second-hand goods you purchase from a GST registered dealer or the GST registered business, you no need to apply this rule. This rule only applicable to you purchase the item from the normal public who have not run a business, who have not a ABN registered. Sorry, GST you registered or ABN registered. But if you purchase a second-hand car from a Toyota dealer, you can immediately claim regardless of how much the amount. Why? That is the GST registered, you have the tax invoice. The second-hand rule with the $300 and above $300 rule only applicable to when you purchase the item from normal businesses. Now we will move into purchase a motor vehicle. The motor vehicle will be restricted. How much maximum you can climb, right? So how much maximum you can climb will be restricted. So you can see 1920, the maximum amount you can climb 5,234 for the motor vehicles. For an example, if you purchase a car $55,000 including GST, how much you can climb? $5,000. You purchase a car for 66,000. How much we can climb? Even though you paid that $6,000 GST, but you can only climb 5,234. That's called maximum limit for GST credit for the car. This rule will be applicable only fewer than 9 passengers or fewer than 2-ton vehicles. If anything more than 2-ton or fewer than more than 9 passengers or business goods carrying vehicles, this rule will be not applicable. For example, your client purchased a truck, 3-ton truck for $110,000. He can climb all the 10,000. That will be not applicable to these rules. Second-hand rules I already explained. Disposing the car assets. When you disposing your motor vehicle or disposing the asset, you going to calculate what the sales price divided by 11. You're going to pay back to ATO as a GST collected, because that's also going not only inventory item, assets when you are selling. If you already claim the GST, you want to pay back what is the sales price divided by 11, right? GST not applicable to the private vehicle. Lease car, when you are leasing the car, GST will be applicable, right? GST calculation. So I'm going to GST calculation worksheet. You can see G1 to G9. I will explain in a minute. And 1A in the best form. And other side G10 to G90, 18. 1B in the best form. I will explain through the GST calculation worksheet. So how are we going to do the GST reporting? Before moving that one, I will explain this part in a minute. GST will be reported quarterly reporting. Normally your turnover less than 20 million, you go into quad every 3 months, you're going to report the GST. However, how to report? It will be a two reporting system for quarterly reporting. One called full reporting. You can see G1, G2, G3, G10 and G11 you're going to report, and 1A and 1B. That's called full reporting. Who should do the full reporting? Every 3 months, your turnover goes to more than 10 million in a year, you must do the full reporting. If your turnover less than 10 million, you can do the simpler reporting. That you are going to report G1 and 1A and 1B. You can see only G1, 1A and 1B. That's called simpler reporting. Who can do the simpler reporting? Who has less than 10 million turnover. If your turnover goes to more than 20 million, you should do monthly reporting. Like Aldi and Coles and Woolworth, they're doing the monthly reporting. Or who registered voluntarily, who not required to register for GST, they voluntarily registered, they can choose when, how they want to report. Normally they can report one annual report as well. Now I am going to, how you going to report to ATO that you are for GST. I will go back to that our best form first. Right, so best form, and so you can see you have the three option: calculate and report quarterly. This is the full reporting. You say G1, G2, G10, G11, and your simpler reporting only G1, 1A, 1B here in other side. Another one annual reporting. If you are voluntary, you can do installment as well. So this is a 3 months quarter. 1A here. This means 1A mean UST you collected. 1B mean UST you paid. You want to get it back from ATO. Now, how we going to report depend on your client. If your client using accounting system, very simple and easy. You no need to do anything. So we will go back and first explain what the GST calculation worksheet. Then we will come back. Right. I will share the screen with you guys. This if you type date website in the Google, this name, you will get it, this one. Now you can see G1 is a total sales including GST. Assume that $330,000, right? How much is GST? 330 divided by 11, $3,000. So if your sales is this much, you collect a $30,000 GST, you owe to ATO. It means you want to pay to ATO. Out of this 300,000, you say your exports the 33,000. What happened? Your GST will be no GST. Out of 330, 33,000 no GST. So you can see it's reduced by 3,000. So you selling some vegetables. How much? 16,500. So $1,500 will down. You sold some input tax sales like a residential rent, $11,000. That's going to be 245, 24,000. It's reducing. So this 300,000, 1, 2, 3, the total 60 is down. Balance you can see total sales subject to GST. Right? Now we have an adjustment. What did the adjustment mean? You did not do anything wrong. You did not do the mistake. But because of the normal business process, you require to have some adjustment. For example, last quarter, you purchase some item and claim the GST, but however, you're not happy with that. You are returning this year, this quarter. In that case, last quarter you claimed, now you return that one. In that case, you should be adjust that one. That's called purchase return adjustment. So for an example, 11,000 you are giving back. What's going to happen? Increasing adjustment. You are going to be increased because last time you climb, this time you are giving back. So that's the one. G1, G2, G3 already explained very clearly what is that. Now we will come back to that other side. Your purchase and expenses, what's going to happen? You're going to claim the GST back from ATO. You can see there are two type of expenses. G10, capital purchase. You purchase a car for your business, 44,000. How much you can get it from ATO? $4,000. Assume that you did that all of your operational and the expenses. How much you are spending? 66,000. How much going to be that your GST? 66,000, 66,000, 6,000, so $10,000. Total 110 divided by 11, 10,000. Now this $110,000, you have purchases making input tax sales. If you did that some residential rental income, you did some repairs, what's going to happen? You want to put under G13, say $11,000. What's going to happen? Your credit going to down by 1,000 because 11,000 not input tax. You cannot claim the GST. You purchase some vegetables and fruits. How much? For example, 5,500. So how much you going to reduce your GST claim? 500. You some private purchases, say 8,800 private purchases. What's going to happen? You're going to reduce your GST claim. This called G13, G14, G15. That will be here. There will be adjustment. This is increasing your credit in this adjustment. What's going to happen last quarter, for an example, you did some sales, you paid that GST, but your client come back and return to you. That's called sales return. How much the sales return? $22,000. What's going to happen? You're going to increase your credit. This is called GST calculation worksheet. You go and see here. So you have a statement, the best, go to the best statement. Wherever G1, you put it this amount, G2, G3, but G4 normally not reported in the full. The total this amount go to 1A section of your BAS. And G10 and G11 you're going to report in the BAS, and same time 1B you're going to report. When you finish it, your reporting is finished. Now question is how I am going to get this G1. You may have two type of clients. One client group, no accounting system. For example, similar Uber driver. So we have a separate GST calculation report, GST detail report calculator. I will show you in a minute. If you go to this worksheet, you can see, I'm sure you can see this worksheet now. So there's a GST collected sheet, GST paid sheet. All of your Uber income, that bank statement, you download in the Excel format and plug into here, sales section. And paid section, you're going to put all the expenses. Then we will work it out. This is G1, 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 G1. Assume that this is the private, you're going to put GST free. Right? There will be a password for that. All right. There will be a password for that. So if you put it G3, for example, what's going to happen? No need to pay the GST. Same thing if you go to the GST other side, you want to say this G1 or G11, the first column, and then going to decide. For example, this is the finance. What's going to happen? GST free is no GST. You cannot claim the GST. When you finish this work in your declaration side, it will show you the summary. You're going to take this number in your GST calculation worksheet, where is G1, G2, G3, and calculate that your best field and include in your best statement. This is for small client, very small client, like a Uber driver with the 600, 700,000, sorry, 60 or 70,000 turnover, or small farmer with the 200,000 turnover. But most of the businesses now have a accounting system. So if you have accounting system, we can do through the accounting system this one. You no need to do that. So I will go to that MyUp and explain to you guys first. Then we'll work it out. You go to the MyUp and click the report, and you can see report will come up. Click the GST. Which one, which method we are using? Accrual basis mean accrual, put the date correctly and display. Now what's going to happen? You can see GST report, summary report, right? It will come up the summary report in a minute. Oh, I said, I will click again. GST report. Okay, it's not working. So we can, I will just relog in that my up in a minute. 1 second. A couple of, give me a 2 second. I will just close that everything and come back. Right, let's see. I want to reopen that my up. Give me a minute. Close. Yeah. I'm just logging the my up, guys. You want to give me a couple of minutes. Right, all good. We got it now, my up. Right. So we go to that my up. You click that reports. And what kind of report we want? We want the GST report. Let's see which one. Yes, click the GST on it. We want a summary of accrual for what is the period we want? 1st of January 2021. And we want what is the quarter end? 31st of March 2021. So we will display the report and we will see how is that. You can see all the GST information will come up here in a summary. However, if you don't know where's the G1, G2, what you can go to that again to that in our MyOp section and click the accounts and click the prepare the BAS and BAS will come out. Right, I will share with you guys in a minute. You can see here all the G1 and G2 will be pre-filled. You no need to type anything. And same time in your 1A, 1B, GST amount will be free fill here. So that's very easy if they have accounting system. No matter what kind of accounting system you use. Why? That's every accounting system the same, only the different places they have. I will just go to that QuickBook and share with you QuickBook or Zero. Which one you prefer? I will go to the QuickBook, right? We have Zero, most of you guys doing, you know that. Right, so that all these report, all these accounting systems are same. They have that different places that their reports, right? Other than that, no change in the reports. I will click the dental excellence one of that client. So if you click that here, you want to find it out. Where's that? That little report. You say that, right? So which a report? So here, click the report and see. Where's the GST reports? Most probably under the taxes. Here's the GST detail report, GST summary report. Easy, right? So in that same time, if you want to the best that labels, click the GST in the QuickBook. It will show you your best period and click and see. For an example, if you, I will click this best and see what's happened. Right, right, right. You can see all the G1, G2 and everything, right? Very simple. So this is the way we doing that all the in our GST calculations. Now we will go back to in our Zero Practice Manager and see how actually you are preparing and launch that tax return, that activity statements. I will click on that activity state that Steve Smith, and you can click here and click the days. That will be GST will be created automatically. And now I will go to see in that Steve Smith. See that there's a activity statement or not. So can you see here? Yes, here the two activity statement. I click one of that, right? You want to put the right dates and all this stuff, but you can see the GST section. You can see which you remember the full BAS. If you turnover more than 10 million, full BAS. If you have a little, you will put the G1, G2, G3, G10. If you are no, less than 10 million, you can use simpler method. You can see only G1, and summary section you are going to do 1A and 1B. So just familiar with this one, we will give you the questions. You want to work it out down the track to understand how is that work. Now we will have a little section balance. We want to talk in our original adjustment. I talk about already. Now corrections. You did some mistake in your previous activity statement. How to correct? This is not the normal business case. This is not the adjustment. The correction of the error. The correction of the error, normally what we do, we are doing the amendment in that next best period, right? What you can do, you can two way you can correct it. One, you can redo that your previous lodgement, that's called amendment, or you can correct through that new latest activity statement as well. It is depend on that how much that your amount, how much the when you did that. There are two way it's going to be corrected, right? So there are credit error mean you work out the net GST amount result, you're reporting paying too much GST on reporting period. That's for an example, you paid twice GST sales, or you paid for instead of 500 sales, you put that 5,000. That's called credit error. Other than debit error mean is make error working out your net amount results, you're reporting paying too little GST. So overstating your GST purchase. You climb more, right? Now you want to pay back. That's called debt error. So it depends on the how much the amount you are going to do the amendment or you going to correct through the activity. This is called corrections. Now, so I'm going to stop today after the GST. So the PAYG withholding will be covered in our next class. So today we are going to stop under up to the GST. Thank you everyone. Looking forward to see you in the week 9 with the PAYG withholding and fringe benefit tax. Thank you. Bye.